Josh Brown, but why don't you tell us, as a long-standing shareholder of Nvidia, how you're thinking about this report tonight?
Yeah, I feel like I've grown up with Nvidia. It's like it's been with me for a long time. Look, I feel that this is such a hard story, believe it or not. You're up in this name. You're in this name for thousands of percentage points. The problem, what makes it harder, normally when you have a stock that goes up this much, you say to yourself, okay, it's an easy sale because the valuation is caught up with the fundamentals. Oh, look, now it's outdone its fundamentals. Unfortunately, Nvidia doesn't make it that easy for you. It just has not outdone its fundamentals yet. It could happen, hasn't happened. And here's the example that I want to give you. In January of 2023, people were saying Nvidia is 45 times earnings. The average semi is 18. It's too expensive. We understand it's fast growing, et cetera, but it's up so much. Here's the problem. Nvidia then returned 239% for the remainder of 2023. It's up another 93% this year. So cumulatively, it's up 540% since January of 2023. The problem now is the stock is trading at a lower multiple. It's 34 times earnings. So it's really a difficult stock to be long. I say that tongue in cheek because, of course, it's one of the most rewarding names in the history of the stock market. But it doesn't get easier just because it's gone up. It doesn't make it simpler to sell.
So it's well set up for you, Stacy, to tell us about your own view of the setup. As Josh points out, there's a lot going into this. A lot at stake, and maybe a lot to live up to. How do you see it?
Look, I think it's going to be fine. Like, maybe that's being a little too blasé, but I can't imagine that anybody's going to come off of this print feeling more bearish about the opportunity in front of them than they felt going into it. There's no way you're going to feel worse. You're going to feel better about it. I'm getting questions from clients on, Blackwell's coming. Could there be like a bit of a delay or an air pocket in front of that if customers push out? And I guess it's possible, although I do think that there's enough pent-up demand to cover over that if it were to happen. But even if it did, let's say that they had a bit of an air pocket because people are waiting for Blackwell. Doesn't that dip get bought like hand over fist? It would just make next year look much better. And I think next year is going to look great anyways. I still think that this is a stock that you have to own. Like, it has its ups and its downs. Like, you sometimes need a strong stomach with it. But as the chart that Josh just showed, like, you kind of have to be there. Mm-hmm. If you had these concerns like a year ago, again, you've missed out on 500 points of growth over that period. I think you need to be there. I think you need to be there.
Bryn, Stacy makes a great point, which is why there's always that expectation, and we saw it when the stock got down to 750. The buyers come in because they feel like they have to be there too.
They do, and I think just to couple what Josh and Stacy said is, not to be Pollyanna, but it's just fact, is that the stock is trading at 15% below its 5-year PE average. So as Josh was saying, the stock's getting cheaper. Regardless, this quarter will not define Nvidia one way or another. It's going to be another solid quarter. Jensen's going to come out and he's going to tell all these great stories. They're going to deliver the numbers. I think they're going to validate this. We're at the beginning of this 10-year shift in the data centers from CPU to GPU, et cetera, and there's going to be a tremendous amount of compute. You can see it with the builders that are building the data centers, with the CapEx being spent from Microsoft, Amazon, Apple, Meta, et cetera. All roads lead to Nvidia. There'll be also lots of other winners, but I just still think within the AI play, this one is just the most straightforward play, and these numbers are going to be solid. I think, though, what's interesting is we always like to look at the options market because they typically get it right. And what's amazing is with a $2.3 trillion company, the market is looking for a plus or minus 8% move. Mm-hmm. So think about that. That's close to a $200 billion plus or minus move for a company. So I just can't overemphasize the size of that to get that kind of move with a stock this big. But that's what the market's anticipating.